Hey guys, this is Mark Shaws in the Pattern Trader coming to you from a beautiful summer day in Florida. Still kind of hunkering down, given the escalating health concerns in Florida, but nonetheless, able to breathe the fresh air and enjoy the surroundings. And while I've been sitting here, I've just been ruminating and thinking about certain things. And one of the things that I've been thinking about is that I know a lot of especially beginning traders, Forex traders, are overwhelmed and fearful when they are looking at price charts, and there's kind of an analysis paralysis. And I think perhaps one of the biggest problems is the fact that there's a lot of misinformation out on the internet about what to do, what information to use, and a lot of traders are, overwhelmed with so much information on their price charts. A lot of indicators, volume, a lot of metrics, Bollinger Bands, oscillators, stochastics. Recently, I went to the Forex Factory forum and found a chart like this, a data-heavy chart where you've got all kinds of leading indicators and all kinds of nonsense on there. It's a short-term chart, and ultimately it's going to lead you on a road to ruin, because it's going to overwhelm you with so much information that after a while you lose your objectivity. And while you might be a winner on a couple trades, eventually this will result in overload. It's kind of the same thing when you go into a casino. If you play the first couple of hands and you're a winner, that doesn't mean you've got this thing licked. And I think that this is the inducement. A lot of internet marketers out there are trying to convince you that this is the way to go. But like anything else, if you don't understand the cards you're holding, and sorry to use all of these gambling and poker metaphors, but if you don't understand the cards that you're holding, you're simply destined to fail. It's a proven fact. There are very few long-term consistent players in this business. And I think one of the big reasons is because traders are looking at a chart that I just showed you. Very short-term. You can't really understand context or history. And ultimately, you're not going to understand what you're doing, and you will fail. So what's the antidote to all of this? And it took me a long time to figure it out, because I was using those charts. I was using a lot of short-term charts, and I was winning and failing and kind of wondering what was going on. And then I just started focusing on the big picture. I only look at weekly or daily charts, also monthly charts, but what I'm saying is I look at bigger references. I want to understand the bigger picture. And one of the most, illuminating trades of kind of trying to get across the point of understanding the bigger picture is in a trade that I did recently in the British pound versus the Japanese yen. Right now, I'm up almost $100,000 in that trade just in a day and a half. So what triggered me to get into the pound yen? Short. You can see in this position I'm actually short. I'm still holding it, so whatever profits I'm showing you right now could disappear because I'm still in the position, or it could grow. I'm kind of confident in the latter. I think that this thing is going to go down. I'll kind of talk about that in a minute. Now, also, this profit graphic is a little bit different than what I'm going to show you in a follow-up video that's going to be synced with this face-forward video. When I did it last night, my profits were about 70,000. Now they're about 97,000. And that will account for the difference. So recently, pound versus Japanese yen has been in a massive rally. Over the last couple of weeks, the pound versus Japanese yen has rallied from 120 to about 140. But to my mind, understanding the context, the historic primary patterns and primary trend for this pair, the pound versus Japanese yen, this was just a bounce within a secular, long-term bear market in the pound versus the Japanese yen. So as you can see from the pound versus Japanese yen weekly chart that was just reflected, The long-term downtrend has been in force for many, many years, 5-6 years. Ever since we saw the governing double top head and shoulders price pattern at about the 195 in pound versus yen, those patterns indicated the future trajectory, which was lower. And now we've been, for the last 3-4 years, just kind of bouncing between 120 and 160. But that's just exactly what these things are, bounces within a long-term secular downtrend. And so whenever I see these nice juicy bounces, to me this is just an opportunity to seize on going the other way. So now this is just not trying to fade a market, not just trying to look for some price pattern and dial into something short term. I firmly believe that the long-term trajectory of pound versus yen is lower. And we will see lower prices from where we're currently trading, around the 134 or so. So I've also shown you now on the daily chart how when this rally occurred last week, I sent out an email to our members indicating that they should look for an opportunity to get short on a bounce. In my email, as you'll see in the follow-up video, I recommended we go short at 136.27. So as you can see, I was actually quite lucky when I'm trying to anticipate selling into a rally. It's a little bit dicey. You have to kind of anticipate where the rally will go. It could stop a little short of your limit order, but I was lucky. Our members were lucky, and I got short right on the bounce at 136.27. It's trading some 150 pips lower now, actually quite a bit lower, almost 200 pips lower. And at the moment, I'm making about 100 grand, anticipating a lower move in pound yen. But again, it was just the familiarity with the long-term patterns, the interim price action, and the ability to understand this is going to be key to your long-term consistent progress in trading.
Okay, before I take you to the analysis that I was just referencing, I just want to refer to a recent email. This was sent out on Sunday. This is what my weekly video report and email looks like. I'll talk about that in a moment. You can see that I favored the price action, especially short pound yen. And I go through a number of analysis of all of the major markets, the dollar index, etc. But really what I want to focus on for the purpose of this presentation is the trade that I recommended on the British pound versus the Japanese yen just a few days ago. Again, it was sent out on the 14th. You'll see that based on this sell limit order recommendation, the trade was triggered 2 days later, and I'm going to talk about that also. So you can see in this chart that I was referencing in my email, we had several price patterns. Now I'm going to go to the real-time chart of the pound versus the yen. I'm going to reinforce exactly what I was looking at under live market conditions, but you can see I was looking at a governing double top in head and shoulders, a long-term rounding top, and once you kind of understand the long-term, then you can understand that the recent reaction we had on the upside was just a dead cat bounce within a bear market. So just to kind of go over, a couple days ago, I recommended a sell limit in the pound yen. I'll talk about why I recommended the limit order with a stop loss and take profit provisions based on a governing double top and head and shoulders bear price pattern and a interim rounding top bear price pattern. And then I said I'd like to get short on a rally, which basically is a limit order. And in this chart, I'm looking at the real-time chart of the British pound versus the Japanese yen on a weekly time frame. This means that every one of these price bars represents 1 week in time. And as you saw in my email, what I was looking at was the long-term, what I call governing price pattern. So right here you see a double top. A double top's exactly what it looks like. Market makes an all-time high, backs off the high, retests the high, and now you have this double peak, this M top. Now together with that very bearish reversal price pattern, in that time frame we also had a head and shoulders. Now a head and shoulders looks just like a man or woman's left shoulder. The peak is the head, and this is the right shoulder, And once it cracked through this neckline, which is simply a line drawn through the pattern, it indicated that this market was going to reverse and go lower. And as you can see, that's exactly what happened, where it crashed from 195 all the way to 125. You could have made $70,000 with a $1,000 margin in that time frame. But again, this is what I'm talking about when I talk about governing price patterns. So both the double top and the head and shoulders, these are bear price patterns, and they were going to govern or dictate price behavior going forward. And that's effectively what has happened. Now you can see over the last several years, we formed a rounding top. Within the rounding top, we have this double top right here, and you have what I call a complex head and shoulders, where there is a number of shoulders. But whatever you want to call this thing, a rounding top, a double top, a head and shoulders top, these are all market tops that indicate eventually the market will go lower. So that's not to say that we go straight down. But you can see that when we do get these bursts of price activity, they're always followed by lower prices, hence this lower trajectory. Now, this is exactly what we saw last week, where I was advising our members not to chase this up move. That to me, this is just a false move within a long-term down market. And this is how you can identify the real moves from the not. Now you'll notice that I am not looking at any fancy graphs here. There's no volume here. There's no MACD going through all my things. There's no Bollinger Bands. It's just what I call a clean or naked price chart with time and price, and this is all I need to make a lot of money in the market. So just to get back to where we were last week, I was advising our members not to follow that rally. That to my mind, it was a matter of time before it collapsed. And then you can see in the week following, we collapsed, which to my mind was very predictable. And so on Sunday, I sent out an email to our members to sell a rally in the British pound versus Japanese yen and to get short at a price level of 136.25. And as I'm going to show you in just a moment, it just ticked by a hair through the limit order, and now it's trading about 150 pips lower than where our sell order was triggered. Now, the problem with the limit order is that the market may not get to where your limit order is. So if my limit order was slightly higher, I would have missed this down move. So it is a little bit, so if I put, it's kind of arbitrary. If I had a limit order up there, I wouldn't have gotten triggered. As it happens, I was anticipating that the market would rally. I wasn't looking for a big rally, and we got short right here. And now I'm going to show you the outcome of that trade. Okay, now I'm showing you a graphic where the sell limit order in the British pound versus Japanese yen was triggered. As you can see on this trade, the activity was to sell the pound versus the yen. The recommended limit price was at 136.27. It's currently trading in the market at 134.89, some 140 pips below where I entered the trade. And as you can see, I'm making a very nifty $70,000 on the trade. Now, the trade is still open, and I could still lose money or I could still make money. I predict that if I'm patient, I'm going to make money over time because, as I indicated, the long-term governing price patterns indicate that the trajectory in pound versus Japanese yen can do nothing but go lower. This may take some patience. You have to keep your stops wide, but you can see how my analysis of the pound yen paid off by just looking at longer term time frames with nothing fancy on the charts other than time and price.
So I hope you got a ton of value by this little orientation comparing short-term charts with a lot of noise with just clean charts with only price and time. Until next time, I wish you a healthy and prosperous trading week.